In the heart of America, a story began, a story of trial, error, and resilience. The Great Depression hit hard. Banks failed, fortunes vanished, and hope faded. The young Federal Reserve faltered, unable to stop the economic collapse. America learned it needed a steady hand to guide its economy. Out of crisis, a new partnership formed, FDR's New Deal, and the Fed working together. Leaving the gold standard gave the Fed power to revive the economy. This shift set the stage for a more active central bank. Then came World War II. The nation needed to fund the arsenal of democracy. The Fed kept interest rates low, enabling massive government borrowing for the war effort. By buying government bonds, the Fed became the financial engine behind victory. As the war ended, leaders met at Bretton Woods to build a stable global system. The US dollar, backed by the Fed, became the world's anchor. The Fed's decisions now echoed worldwide. Its stability was no longer just America's concern, it was the cornerstone of global finance. The world looked to the Fed for a steady hand. The institution had evolved from a hesitant bystander to a central pillar of economic stability. The lessons of crisis had forged a new era for the Federal Reserve. Its actions would shape not just a nation, but the world. Post-war America boomed. Suburbs grew, factories thrived, and a new middle class emerged. The Federal Reserve's mission became clear: keep prices stable and strive for maximum employment. Balancing growth and inflation was a constant challenge. But prosperity faded in the 1970s. Oil shocks and stagflation gripped the nation. Inflation soared while the economy stagnated. Confidence crumbled. The Fed struggled, its old tools failing. Then Paul Volcker took charge. He saw inflation as the enemy. Volcker raised interest rates dramatically, triggering a painful recession. Businesses closed, jobs vanished, but he held firm. The pain was immense, but inflation finally broke. Volcker's resolve restored the Fed's credibility. He proved an independent central bank could make tough, unpopular choices for long-term stability. His actions laid the foundation for decades of growth. The lesson was clear: sometimes, a guardian must be firm to be effective. The Fed's dual mandate, stable prices and full employment, would guide it through future storms. The institution had learned that credibility and courage were its greatest assets. The seeds of modern monetary policy were sown in these hard years. The Fed emerged stronger, ready for new challenges. The 1980s and 1990s brought rapid change. Technology transformed finance and new risks emerged. The Fed faced crises. The savings and loan collapse, the 1987 stock market crash. Under Alan Greenspan, the Fed acted swiftly, flooding markets with money to prevent collapse. The Fed became the ultimate backstop, the lender of last resort for the global system. This role was tested in 2008 when a housing crisis spiraled into global meltdown. Lehman Brothers fell, credit froze, and the world teetered on the edge. The Fed slashed rates to zero and launched quantitative easing, buying trillions in assets. It acted boldly, inventing new tools to keep credit flowing and restore confidence. The intervention was massive, preventing a new Great Depression. Just a decade later, COVID-19 struck. Economies shut down overnight, markets seized up even faster than in 2008. The Fed responded with unprecedented speed, cutting rates, buying assets, and creating new lending programs. The lesson in crisis: act fast, act big, and do whatever it takes. The Fed's actions stabilized the economy and reassured the world. Its role as global financial guardian was cemented. The institution had become more powerful and more essential than ever. Each crisis reshaped the Fed, forcing it to adapt and innovate. The world now depended on its steady hand in times of turmoil. Today's Federal Reserve wields power beyond its founders' imagination. Its crisis interventions have saved the economy but raised tough questions. How much power should an unelected body have? Its decisions move global markets and touch every life. Critics warn of risks, asset bubbles, inequality, and the limits of central bank intervention. The debate is about democracy itself. New challenges loom: digital currencies, climate risks, and geopolitical shocks. The Fed must adapt without overreaching its mandate. At the heart of it all is trust. People must trust their money is safe. Markets must trust the Fed's judgment. This trust is fragile, earned over decades, lost in a moment. Maintaining it may be the Fed's greatest challenge. The story of the Federal Reserve is the story of America: crisis, adaptation, and resilience. From the Great Depression to today, it has stood as a guardian of stability. The journey continues, with debates about its power and purpose. But its mission endures: to provide a safer, more stable financial system. A steady hand, guiding the economy toward a more prosperous future for all.